no entrepreneurial journey is straight. We're going to do mistakes. We're going to make errors. But we're not allowed to crash. If you crash, you're dead. And we made a lot of mistakes. We didn't crash yet.
Cyril, welcome to the CW Muse podcast. So great to have you here on a Saturday morning. So thank you for being here with me. So you are one of the 3 co-founders of Tioopo Capital, a private equity firm based out of London. The world of private equity manages trillions of dollars globally, and it becomes one of the most dominant forces in capital markets, owning businesses, across healthcare, manufacturing, services, and a lot of different sectors. What's interesting is that, while this industry has scaled massively, most founders of PE firms spend like 10 to 15 years building track records before they raise a fund, which is why your story really stands out because in 2020, 3 founders, yourself, age 25, then your 2 co-founders, age 26 and 31, decided to start their own private equity firm. And 5 years later, you've built a team of 9, crossed the 100 million marks in assets under management, and have more than 500 employees across your portfolio companies. So the real question here is, how does that even happen? But we're going to get into all of this. But before starting any session, I like to ask my guest one question. Imagine we're doing this in front of an audience. Who is one person you would like to see in your front row and why?
Thanks for having me, Karine. It's a great question. To be honest, whenever we talk and we are out there, the main audience we're trying to target is the entrepreneurs that we want to back, the entrepreneurs that we want to partner with, and the more entrepreneurs we meet, the better deals we can do.
That's great. So, as I said, 3 very young co-founders that started this private equity firm. How does it all happen? Where did it start for yourself, for the 3 of you? Just take us through it.
Yeah. So for myself, it started as a strong conviction early on that I wanted to build a business, whatever that was. And then as I started my career in finance, in hedge funds, I realized that I loved looking at companies. I loved investing, but I wanted to invest and have an impact on my investments and be able to sway the investment in the way I thought that works. And obviously on public markets, you can really do that. And so it turned out lower and mid-market private equity was exactly the place to go. And I was lucky enough early on to meet my 2 co-founders, Shahan and Greg, who coincidentally had exactly the same view and the same view that the best place to be investing and to spend our time on a risk-reward basis was on the lower mid-market, especially in the UK and France, where we are focused and now expanding into all of Europe.
Okay, amazing. And so can you explain a bit more, the pivotal moment? Because obviously you started working not for yourself, but in other companies. And then you went and launched this. At what point did you realize that, now was the right time, especially so young?
It was a no-brainer on my side. I like I said, I always wanted to do my own thing. Obviously, when you're that young out of grad school, you wanna get some experience. But very quickly, I understood that to get to the level of experience you need to build your own company, you're going to need to spend 20, 30 years. And that's why most PE founders are much older. So I thought I found the right partners. Things are changing. It was middle of COVID. And the market is going to present some opportunities. We didn't know what was going to happen at the end of COVID. We didn't know what was going to happen at the end of the lockdowns. But having the right partners, a very strong conviction on the market we're in, and believing in our abilities and in our vision and alignment was just a no-brainer. So the process was very straightforward.
Yeah, okay. And so, obviously you were quite young. Yourself, you were 25. What skills were critical and what do you feel like you were missing? So how did you compensate, for the fact that you didn't necessarily have all of this track record, since people start later on in their careers?
Yeah. The skill was a very, very strong belief in what we were doing. The other one is fearlessness. in just pulling the trigger. At some point, you just got to do it. And then, obviously, we were young. We're still quite young with more experience now. Um, but compensation came mostly on uh, over preparation in any meeting that we had. Whoever we were meeting, we would spend hours just preparing for that specific meeting, and and consistently preparing for the meetings ended up in us 5 years later having very good processes. And the other one is we have, as founders, we had very complementary skill sets, and we surrounded ourselves very early on with great strategic advisors at the fund level and at the platform level. We had Philippe Duval, who used to be CEO of Edmond Rothschild. We have Philippe Thomas, who used to be the Dean of Masters at the Masters that we did with Greg. Um, and we have Robert Buchbauer, who used to be the CEO of Swarovski. So all three, again, are complementary, like the three of us, and they brought some experience that we didn't particularly have at the time.
What have you learned from these three, early on that you think you still apply today?
All three, to be honest.
Yeah.
um, uh, all three skill sets are very, very important to be a good investor, and some more um, skill sets or learnings came along the way. And the most important one for me is learning to say no, not jumping on trends.
Okay.
Very easy to buy a company at the peak because you feel like you're right,
Mhm.
but it's extremely hard to buy a company when it's not going great. And this is when you do good deals.
For sure. And so, obviously, like exactly to that point, there's a lot now of hype. Everything's about, AI and tech and all of that. But you kind of are more in the industries that we wouldn't call, sexy, but are rather unsexy. How do you train your eyes, to those to see the value in those deals and the no that you mentioned? Like how do you know you're making the right decision or not missing out on something?
Uh, we've drank our fair share of FOMO since starting. And like you said, you see companies just skyrocketing from one year to another, but also you see on the flip side, you see some failing massively.
Yeah.
Um, and again, it's a process of sticking to our conviction, uh, being consistent, and most importantly, um, being structured in the way we look at transactions. And for us, boring businesses or non-AI, non-tech businesses are extremely sexy.
Okay.
Um, and the sectors we're exposed to in our portfolio are quite sexy sectors. We have a fashion, luxury, subcontracting business, ultra high-end automotive business. We have a textile factory. We have a medical factory. So we get very excited about
Mhm.
these sectors.
Yeah, I guess also it's pretty subjective at the end of the day,
Exactly.
aside from the value. And so maybe we can focus, on those deals. Obviously, now today you have more than what you had when you started. You started with nothing. How did you get your first deal, and how did you launch the fund?
Yeah. So we started doing deal by deal. So whenever we were finding a deal, we had to go and find investors to back us to be able to acquire that company. Um, the first company actually was a serendipity event, and Greg started a business called Sneakers and Chill with his brother, and his neighboring shop was owned by a guy whose father had a factory, this luxury leather goods factory. And while chatting, Greg told him that he was looking for, his friend told him that he was looking for um, investors for his dad's company. And that conversation spiraled into us acquiring that company with the son of the owner and running it into probably one of our most successful deals to date.
Wow. Okay, that's amazing.
Yeah.
And so, how did that process look like? Like on paper, I guess. For someone who's maybe looking to start their own fund, like where do they start? Like say, okay, you got this situation serendipitously when you were with your neighbor, but were you ready to kind of set this deal up, financially, legally, in the UK to do a deal, or how did that come about?
Were we ready? No, but I think that you can try to get ready your whole life.
Mhm.
Unless you start doing it, you'll never really get ready. So a fun fact is, a week before acquiring the business, we realized that at the new structure that we set up in Luxembourg, we had to have a bank account. So we had a week to find a bank that was kind enough to open a bank account for us so that we could acquire a company.
Wow.
And it's a succession of all these stories that show that you're never really ready. You just grow into your processes and into your discipline. Um, and it's a fun journey.
Yeah. And so in that part, so if we take the example of this deal, and you mentioned that you and your two co-founders have complementary skills, what are each of your skills and how do you work together, on that?
I'm going to start with what's our common
Mhm.
skill and trait. We have a relentless vision and focus on what we want to achieve. And this is the most important attribute that we need to drive Tioopo to a success. Then, in terms of the skills required, honestly, it really depends on the situations. Some of us are more analytical, some of us are better with people, some of us are better at negotiation. And depending on the scenario that we have or on the challenge that we face, we choose who of the three of us is going to be facing it.
Okay.
But where we started, where all three of us were doing everything, even at one of the first meetings we went, all three of us were taking notes and realized that was so inefficient. To today having really um, job descriptions for every single one of us, and we iterate these job description and the focus and tasks of each one of us on a yearly basis, and we usually do that in the first part of January every year.
Okay, amazing. And so what is maybe some advice or that you could give someone who's maybe looking to start their own fund and will not do it alone and will want to have co-founders? What is something they should look for and what do you think is, critical?
The simple dumb answer is capital.
Okay.
Without capital, you can't really buy a company.
Yeah.
So so you need strong capital and a strong company.
Mhm.
But then you also need strong discipline. So just start, and then things will fall in order
Yeah.
if you work hard enough.
Okay. And so the capital part, right? You need to raise. How does someone, as young as you start to raise money and then get the trust from investors, but also the trust from, the company because it's their life's work. So it's kind of a two sides to it. How did you do it so young?
So at the company level, it was one, proving that we were capable of sitting at the top of the governance of such companies, to the person selling it to us, because they're not only selling it for financial purposes, they're also selling it for continuity of the business and for the employees. So, and it's a lot of preparation, showing that we did our homework, we know the market, we understand the market, and we are not these and and we are structured in a way that will not sink his company
Hmm.
and his life's work. On the capital side, um, we have we have investors that backed us from the start. We started with only 2 families backing us. Today we have more than 80 families backing us. And it really starts, and that's why we started on a deal by deal basis, because it was very hard to go see investors and tell them, commit capital to me and then I'll buy good companies.
Hmm.
Whereas how we started is, we found the right company and we said, we have the right company, we've negotiated good terms to acquire it, back us to buy this specific company. So once they see and understand what you're acquiring, and if you present it correctly, then they end up backing you.
Yeah.
And after our fourth deal, one of our main investors came to us and told us, guys, start a fund, a blind pool fund, and I will back you, I will anchor the fund. And this is how we started our first fund.
Oh, okay. Okay. Amazing. And so, in that journey, when you're gonna get this deal signed, what differentiates Tioopo so that this company decides to go with you and not another firm, because there are so many here, and so I feel like because it's such a big saturated industry, you need to kind of be able to differentiate yourself. So what does differentiate Tioopo?
It is a very saturated and competitive industry, obviously, and we have a few things going in our direction. The first one is our youth and flexibility. The fact that we are extremely hands-on with companies, but in our size of the market, all good investors are hands-on. And then one true aspect is our the flexibility of our investors. We are backed only by families with no institutional capital up to date. And these families have much more flexibility than a typical institutional capital fund. So we are able to hold investments for maybe longer if they're performing well. We are able to hold investments for a shorter period of time, and we are not sector constrained.
And so along your journey, what were some things you maybe realized that were harder than expected, and maybe things that were actually easier than what people would have told you?
Harder than expected is you actually deal a lot with people, and the people management takes I wouldn't say harder, but it takes much more time than we thought when we first started. Um, and the bigger the companies, the bigger the people problem, and the bigger the relationship intricacies um, are. What was easier than expected? It's not very easy. That's the reality. There are challenges all over, but if you have a good team, you have good processes, you have good consistency in the way you do things, it becomes easier.
Mhm. And so, with all of you probably had a lot of challenges, still are maybe having some. What are some learnings that you've had along the way that you can share with people so that, when they get started, they kind of have those in mind also?
Stay consistent to your vision. Uh, Being surrounded by the right people is key, and this is something we constantly tell ourselves. We need to hire the right people. We need to have the right people around us, whether it's at the platform level or at the company by company level. We have great advisors, great board members on our companies, and we have great advisors and a great team at the fund level. And this is really key for, in my opinion, any successful entrepreneurial journey.
When you look at the deals that you have, are there some that like, you would say you invest on for the fund, but then you wouldn't necessarily invest as a person, as a personal investor for yourself, and then vice versa? Because sometimes, the vision of the fund doesn't necessarily align with the vision for yourself. And looking at a lot of deals, maybe it teaches you something about, the risks you're willing to take and how it fits in the portfolios. Do you kind of get sometimes that with a deal you see where you're like, it wouldn't really work for the fund, but I would want to, do it for myself?
For the first question, in terms of uh, would we do a deal with the fund that we wouldn't do for ourselves? The answer is clearly no. We are 20% of the capital of the fund,
Okay.
and so that shows the alignment with our investors, but also with the entrepreneurs we back. And this is a very strong point when speaking to these entrepreneurs. And the answer is very clearly no, because one, we are investors of the fund, and we started this fund because we wanted the product that we are
Mhm.
showing to our investors. So we're very much aligned in that sense. So for your second question on whether we look at these and we would like to do it for ourselves because it doesn't fit the fund is flexible enough on the type of companies we look for, and most of our pipeline is companies that we would anyways do with the fund. And if we don't do them with the fund, that means it doesn't fit the personal portfolios or the fund's portfolio. But looking at these and doing them on our own would be just a waste of our resource and energy.
Okay. That's fair. I'm just always so curious because sometimes you have, maybe it doesn't apply actually when you have your own fund, but for, analysts working in, M&A or private equity funds, probably they don't necessarily understand or, would invest in the company that they're working on. if you work in a bank, you're an analyst, you're working on a deal. It's not a deal you would yourself invest in, but you have to still do it. And sometimes it's the other way around. So I'm always curious about how you view those two things, because it teaches you about also the risks you would be taking. And so you mentioned obviously the pipeline and how deals have you had to look for them first. Now they come to you. How many deals do land on your desk maybe, and then how do you filter them out so that you know which ones to take into due diligence and then start looking into them more deeply?
So last year we looked at more than 350 companies. When I say looked at is we got more than 350 companies on our desk on which we received the information memo, um, and that we either passed quickly or looked deeper. 50% of those are companies that we actually analyzed, meaning spoke with the management team. And then we ended up doing 2 deals last year.
Okay. Wow.
And that's the funneling of the pipeline into transactions.
Mm-hmm.
And obviously we would love to receive more deals. And now, to be honest, with AI, you can understand sectors so much faster, process information so much faster, that with the same team you can process so many more deals. But we would like to do more deals because we spend a lot of time on each portfolio company. We this is the main bottleneck, or at least this is the main focus that we want to keep.
Mm-hmm. And so you mentioned AI a bit. What is your view on AI in the private equity space? Do you use it? Do you see it as a threat, or do you actually leverage that? And how do you use it if you do?
Our view is that early AI adopters will benefit from an early arbitrage until the market catches up.
Okay.
And given that we are younger than the typical private equity in terms of founder age, we want to capitalize on that. And so AI adoption is very important, whether it's at the platform level, at Tioopo level, or at the portfolio company level. At Tioopo level, we use AI daily.
Okay.
And we are constantly looking for new solutions and new applications to streamline our processes, to make the team more efficient, to make our research more efficient and better.
Mm-hmm.
At the company level, it's really on a case-by-case basis. If we find off-the-shelf products that we can implement within the company, then we do it. But if we find problems on which the solution needs to be a tailored solution, AI-driven, we do it as well. And we are currently working on 3 mega projects with portfolio companies of building an AI tool specifically for the needs of our portfolio company.
Okay.
So we're very much invested in AI, very much um, um, pushing AI to our teams, and it works.
Mm-hmm. I mean, I think it's revolutionary, obviously, but
Yeah.
it's also very scary. Sometimes I wonder, like, can we ever go back to a world without AI?
Same question applies to internet.
Yeah, sure.
So I believe the answer is no.
Yeah.
Yeah, how many times did you use ChatGPT? So it's very simple.
Yeah, for sure. And even beyond ChatGPT, I think I'm one of like the old people who only use ChatGPT, whereas AI is like so much more than that. But so PE ultimately is about value creation, exit opportunities. Can you kind of explain that a bit? How you look at it, how you add that value, if you want to take a specific example or just in general, and then how you look at the exit opportunities as well, and then
Of
we can
course,
go more into that.
of course. So our angle is acquiring strong companies, cash generating, that have a shareholding issue, and the issue most of the time is just succession. So we invest in companies, we acquire companies that have very strong fundamentals, a very strong market position in usually their niche markets at these sizes, that either are outgrowing their current organization and need someone to come in and help be the sparring partner of the CEO, or it's a family that don't really want to pass on the company to their to uh, down the family, and just want to exit and retire, but have a strong business and don't want to leave it to anyone. once we acquire these companies or enter as a majority shareholder in these companies, we have our internal process of value creation, which is usually tailored to the company and worked on throughout the 6 to 8 months of due diligence for each company. We have recently hired an operating partner whose only job is to spend time within portfolio company. So this person does not fundraise, does not source deals, does not do due diligence. He spends 5 days a week within our portfolio companies working on various projects. And us as founders also spend probably 2 days a week within our portfolio companies as well. So it's a very, very hands-on type of investing that is mandatory in that size of the market and in that niche of the market. And it's really creating organizations out of the companies that we acquire by hiring the right people, having the right strategy, challenging management on some points, and offering our wider network of advisors and wider network of potential board members.
Interesting. So how do you spend most of your time? Imagine I come, spend a day with you in the office, or like a week, because in a day can't really see much. How do you structure your time between the fundraising, the being with, with your portfolio companies, speaking to investors, etc. Like how do you manage it?
So every week is different. And it's a bit of everything at the same time. With time, we've learned to segment that. So we segmented that between the three of us. If you want to focus on what I do, for example, let's talk about last week. The on Monday in the office, looking at transactions, we have our Monday morning meeting at 8:30 every Monday, looking at the pipeline and looking at all the key strategic actions and events of the week that will shape the firm and shape the company going forward. Then throughout the day, probably review different deals with the team. Maybe a few investor emails or investor conversations, and also a few towards the end of the day, typically between 5 and 7, conversations with some of our CEOs. Tuesday, I was at the portfolio company, spending the day to prepare a negotiation with one of our key customers. Wednesday, second day at the company, but focus more on operational problems. On Thursday, had some investor meetings in London. And on Friday, yesterday, also deal work. I met with the management team on a new company that we're looking at the moment, and then more market analysis and work with the team in the office.
Okay. That's so cool, because I feel like no day obviously is the same, and then you get to do different things, and then be at the part of being at the companies. I think it's so fascinating because yes, you work with investors, you source deal, etc., but you see the impact
Yes.
that you do
Yes.
Directly, which is amazing. So when you look at the deals, are there things that are immediately maybe red flags to you, or is there something specific that you look for when you look at them?
It really applies on a deal by deal basis. Are there immediate red flags? Usually, yes. If we don't trust the people, if we feel that we cannot trust the people, for us this is a red flag.
Okay,
It's a bit
interesting.
different than the typical customer concentration, etc.
Yeah.
Obviously, we look at the typical, all the typical customer concentration, supply concentration, the market, etc. But to look at a bit at the bigger picture, given that we focus on companies that have been here for some time, have been family owned for some time, one simple question we ask is, do we think that company is still going to be relevant in 10 years? And this is our future proofing question. It's a very simple question that now is a bit embedded in the way we look at things. And if the answer is yes, then we're interested to look into it. But the reality is we like companies, especially in the geographies where we focus, with high margins.
Okay.
Because there is so much macroeconomic pressure, fiscal policy pressure, that to be operating in these regions, you need a high margin to be able to absorb these shocks.
Yeah. If we think about the different sectors that you're in, which ones would be, higher margins than others, and which ones maybe are you more interested in general?
So in niche industrials, in niche manufacturing that we do in our geographies, and if you look at our portfolio, they're all relatively the same margins, and we're talking 15 to all the way to 35% on the highest margin company that we have. They all cover a niche manufacturing for low volume, high value product, whether this is specialized glass, hypercar interiors and exteriors, small leather goods, or even textile on very niche products. They are all high margin. In services, it really depends on the service. If it's a very competitive market and very large market, then the margins are going to be lower. And then if it's a more niche market, then the margins are going to be higher.
And your like roles when you help those portfolio companies, whether it's negotiations, speaking to the board, etc. Have you had any situation that was more challenging than another, or that taught you something, by being maybe in an awkward position, or you had to make a tough decision at some point for one of the portfolio companies?
Every key management change is a tough decision, because essentially what drives these companies' success is the people leading them. And these are the highest impact decisions we can have on portfolio companies. But these decisions are only done in a good way if you spend enough time with the company, understand the business enough, and understand the people enough. And it's very tricky.
I mean, yeah, I'm sure. That's why I'm curious. I'm interested to know like how you handle that, or if there's any advice that you would give someone who has to be in that situation eventually with one of their portfolio companies.
It's funny. My best friend actually asked me the question last weekend.
Already. Did you give him an answer?
It's a tough answer because when you look from the outside, it seems like, okay, how is this guy taking these decisions? But once you're in it, you're in it. And so when you have to call the shot representing the majority shareholder, which is Tioopo, usually you got to do it. But being surrounded by my partners, by our advisors, is always a very, very good sounding board. But at the end of the day, either you or one of my partners is the person calling the shot at that point in time, independent of all the advice that we've gotten. So we just got to trust our gut, and with time, the experience that we've accumulated since then, our decisions are better and better.
Yeah. I mean, I'm pretty sure, like, if you look back, through these years, is there something you would have done differently when you first started that you feel now is like, oh my God, like if it had been done this way, then today would have been maybe simpler.
No, because let's look at it this way. So both Shahan and I have flying licenses.
Okay.
And what we've always said from the start is no entrepreneurial journey is straight. We're going to do mistakes. We're going to make errors. But we're not allowed to crash. If you crash, you're dead. And we made a lot of mistakes. We didn't crash yet.
Yeah. I love that you said yes.
Yeah, and I hope we never do.
Yeah.
But these are inevitable.
Yeah.
Especially when you're building something like we are on a full lifespan. It's not something that we're doing and exiting. It's something that hopefully we'll pass on to our kids. So we will have some crashes. We haven't had any yet, but we've had some mistakes. We've had some wrong decisions, and all these shape how you become. So would we do it differently? No.
Yeah, I like your analogy of comparing it to flying a plane, because I feel like the mistakes are maybe your turbulences, and then the crash will hopefully
Yeah,
not
the
come.
turbulences you can't control.
Yeah, exactly.
the mistake you can control that.
Yeah.
So it's a bit more than turbulences.
Okay.
But yes,
That's true.
yes.
What's one mistake that you feel like taught you the most, that you always keep in mind when you're faced with a tough situation?
One obvious one is one of the companies we acquired, not because the company was not a good one, but because the timing was not the right one. we acquired a company that manufactures products for the pet sector in December 2021. So it was kind of the peak of COVID.
Hmm.
Everyone was staying home, and spending on everything that was pet slash home related was extremely high. But today, in hindsight, it's very easy to say, yeah, but that was a unique time. But
Yeah.
when we were in that time, no one knew if we were going to out of our houses again. It was a very, very confusing
Yeah.
time. And the mistake that we did is thinking that the growth that we were seeing at the business while we were negotiating for this company was going to be sustainable on the very long term. And then post COVID, we had a little post COVID hangover where the revenue of the company went down drastically. And so that is a timing error on our
Hmm.
side. But again, it was a mistake. It was not a crash.
Yeah.
And the company recovered quite well and is performing fantastically today. So we yeah, we made that one right,
Okay.
and that took a lot of work, a lot of consistent work, and not keeping our eye off the ball.
Hmm.
And we're quite happy to say that that turned out to be a success.
Okay, wow, amazing. You turned it around.
Yeah.
And so, obviously you have a few portfolio companies with you. How do you think about exits? Have you done any? Are you looking to do any? If there's something you can share about that, because ultimately, I guess that's also, where you want to get to.
Of course, an exciting time. We actually just exited on one of our portfolio company in the medical sector, um, which is it's our first exit. Fantastic
Amazing.
exit. We returned almost 30% annualized return to our investor, which is a really good return. And that's the first of many. Next year we're planning two exits, and we want to be a PE firm, that returns capital. The PE
Mhm.
industry has had this stigma of rolling over from one fund to the other or not returning capital to take fees, etc. We charge probably the lowest fees in the industry because we want to compensate it on exits and on returning capital to our investors, and we are showing it with that first exit.
That's amazing. That's a huge milestone. Congratulations on
Thank you.
that one. Amazing. And so if, we take it a bit on a different tangent, and I want to think about, maybe my listeners, a lot of people who work, in private equity maybe already in M&A firms, consulting, everyone's trying maybe to break into private equity. What is an advice you would give, those younger people, or even maybe, people your age that haven't done what you've been doing?
Um, to get into PE is quite difficult, not because the job is difficult. We're not sending rockets on the moon. It's just because there's very little space. And for a fund like ours, we're a team of 9, we have a good team. We're looking to hire maybe 2 people this year. Whereas if you're looking at consulting or M&A, they're constantly hiring.
Yeah.
So that's why private equity is more difficult to get into than other service companies. Um, an advice is just keep working towards it, keep networking with the right people, keep meeting people, reach out, ask for advice, and try to network your way into it, because that's the way you could make the difference. There
Hmm.
are very good profiles out there,
Yeah.
and there is a lot of competition for very little seats.
Yeah. No, that's so true. I think you always need to find something also that differentiates you, because ultimately a lot of people have similar CVs and it's hard
Yes,
to choose. And so,
exactly.
for example, you mentioned about potentially hiring 2 people. What would you be looking for? Like, what do you think are skills someone needs in that role once they actually join?
Um, it's gonna sound very uh, uh, like a bateau answer, but curiosity is super important because you look at so many different sectors and so many different industries. So you want that person to be very curious because you're going to spend a lot of time looking at the markets, and understanding business models. Um, Another one is interpersonal skills, especially in firms like ours. In bigger firms, it's a bit less important when
Hmm.
early on, but firms like ours, we're a small company. You're going to be interacting with people very quickly. So interpersonal skills is important. You need to enjoy interacting with people. You need to enjoy pitching. You need to enjoy negotiating, because if you're able to do it, you're going to be doing it very quickly.
Hmm. People management, I think that's a super important thing that maybe gets overlooked. It's when you talk about also, being a salesperson, maybe sometimes it's not, doesn't have the best reputation as a job, but it's so important because this is what at the end of the day will get you to that next step, because you might have, the best fund, the best product, but if you don't know how to market it, if you don't know how to talk to people, then it's, you kind of get blocked somewhere. What do you think? How do you, stay curious and learn about how to interact with people? And, is there maybe things that you do outside of work that help you in that?
Um, yeah, it's a constant improvement process. And at the end of the day, we're all human, so it's not always easy to be around people, to manage different people, different personalities, etc. So your social battery runs out quite fast on days where you have to interact with a lot of people, and that happens quite often, as you saw from my week.
Hmm.
Um, so what's really important is to also learn to disconnect and to spend some time. I love spending time with my girlfriend and our dog on the weekends, just walking around, going to the park, etc. Um, and I like spending time alone. Most of the time, doing outdoor sports. Long endurance sports is for me the best way
Hmm.
to disconnect and and to just have some time to myself and to think.
Yeah.
That's very important to reset, especially on weekends.
Yeah, definitely. Especially when your head is so focused, like throughout the week, you need kind of that break, like we all do. So I'm going to close maybe with like one last question that I find it so interesting how you went from being the youngest in the room to, now today what you have is, I don't know if you're still the youngest in the room or,
Probably,
yeah.
probably.
How does that feel? Have you, and how do you feel like you as a person have evolved throughout, since you're always still the youngest in the room? You obviously did grow for yourself anyway.
The feeling was at first we had the imposter syndrome a lot, and trying to justify our place by overworking, over preparing, but that stuck. And today we know what we're talking about, we know what we're doing, we have our own processes, we have our own experiences. So we really don't see it that way. We're probably most of the time the youngest in the room still today, but it doesn't feel that way at all. We we feel we earned the seat at the table, and it's just work.
Yeah. No, but that's amazing. Honestly, like you should be so proud, I guess, even of yourself. Comparing it to 5 years ago and how you are today. But that's very inspiring, and I think there's not a lot of people who can say that they've done what you do. So that's why I really wanted to have you here and to talk and hear your story, because it's not one that everyone can say they've been through. If there's anything you would like to share, last with our listeners, happy to hear it from you. Otherwise, it was so nice to speak to you today, Cyril.
Thank you, and thanks for the kind message. We still have a long way to go. We're not where we want to be, and we probably will never be, and it's going to be constant growth. Um, and if you wanted to say a few words to anyone listening and wanted to go into entrepreneurship, whatever that is, just do it. It's fun.
Until it's not.
It's fun.
Yeah, okay, love that. Thank you, Cyril, so
Thank you.
much.
Thanks for having me.
You've been listening to The Seat of the Muse, and I'm so grateful you chose to spend this time with me. If something stirred you today, a thought, a feeling, a question, I'd love for you to subscribe and follow on your favorite platform, leave a review, and even share this episode with a friend. Your support truly fuels this space and helps invite more voices to sit down with me. Until next time, stay curious.